Mintos fixed its public statistics page, now showing Nera Capital and MFO FintechFinance as suspended lenders. TD Funding has launched bonds and TWINO repaid all its obligations from Russia. Welcome back to P2P Empire. In this video, I will walk you through some of the latest developments in the P2P lending industry and show you also the current performance of the loan books in which you are investing on individual P2P lending platforms. Nothing in this video is investment advice. I am presenting you with the publicly available performance data published by the platforms themselves. You can use this data to gauge how the platform is currently performing. However, I do suggest you read the financials of various loan originators and consider the red flag section, which you will find in every platform review on P2P Empire. Serious investors who plan to invest a substantial amount of capital should also question whether the platform's business model is actually sustainable. If you don't do your homework, ignore red flags. It's just a matter of time before you lose money. Keep in mind that the higher the funds in recovery, the higher your risk on the platform. We classify funds in recovery as loans that are more than 60 days past due on P2P lending platforms and marketplaces. For crowdfunding platforms, any loan with a delay of more than 90 days is classified as in recovery. So let's start with the platforms reporting no loans in recovery. PeerBerry leads the pack with about 144 million in outstanding portfolio and a month-over-month growth of close to 6%. The platform reports zero funds in recovery, and it recently added another lender from South Africa, further improving the diversification options for investors. InRento offers an average yield of close to 11.7%. Currently, the platform is managing almost 85 million, up 4.5%, and no defaulted loans at all. If that sounds too good to be true for a real estate platform of that size, you are not alone. I have a call with the CEO of InRento next week to discuss what their strategies are to retain a 0% default rate. If you have any questions for InRento, leave them in the comments below. Robocash offers about 9% with a loan book of around 65 million euro, up 1.2% and no funds in recovery. It is worth understanding what you are actually financing here. Investors are mostly funding a business loan to the group itself, funneled through the Bucharest entity to Robocash Singapore and distributed within IUVO Financial. The 0% is accurate, but your exposure is to the health of the group, not to a diversified pool of loans. As of recording this video, IUVO Financial has not yet released financial report for 2025. There is more to report about Esketit than usual. The portfolio is just under 50 million with no reported funds in recovery. However, we are aware of ongoing developments concerning the Jordanian loan portfolio financed through GMD Investments. Currently, there are no actions you will need to take. As soon as the information is public, we will inform you on our newsfeed. Afranga continues to offer one of the most competitive rates in the market at above 14%, with a 14 million outstanding portfolio, up almost 4.8%, and no reported funds in recovery. The thing to manage here is concentration. There is a significant overlap of shareholders across the lenders on the platform, so your diversification is thinner than it looks. Additionally, in my last video, I pointed out some of the things I pay close attention to based on the latest financial reports from Stick Credit. If you have not watched it yet, you can watch it right here. Fintown reports about 19 million with no funds in recovery and no payment delays. There are no updates at the time of recording, although in their Telegram group they informed investors that next week they should publish updates about the first half of 2026. Triple Dragon Funding had the busiest month of any platform here, and the portfolio grew by 4.2% to 15 million. There are no funds in recovery. Three things happened. First, they launched the TD bonds over 2 to 3 years at 14% with bonuses of 1 to 2%, used as working capital and to pre-fund larger loans. I suggest you read this carefully because TD bonds are unsecured senior obligations. You are lending to the company itself, not against a specific asset, which is a different risk profile from the normal loan product, even though it sits in the same account. Second, from mid-August, they are cutting loan rates from 14 to 13.5%. And third, they have enabled early exit on the first assets financed. Keep in mind that this is not a secondary market. Another investor has to want your loans via the accrued interest feature, and exiting might cost you a part of your cashback bonus. Revest, the small unregulated Croatian platform which is financing loans from Kazakhstan, grew by 17% to 1.92 million with no funds delayed beyond 30 days. As a reminder, Revest is funding loans from a single lending group, so the concentration risk is something you should keep in mind, and that is exactly why you are being paid above 14%. Now to the platforms carrying some loans in recovery. Lendermarket reports 61 million with about 0.2% of the portfolio in pending payments, roughly 123k. Essentially, nothing has changed compared to the last month. Debitum grew to 70 million euro with 1.76 million in recovery in Ukrainian loans. Keep in mind that on Debitum you are basically funding an over-leveraged lender with no clear path for refinancing outside of the retail investors on Debitum. Indemo offers the highest advertised average yield on this list at 21% with 32 million of assets under management, up 5.4% and 909k in recovery. As always, we classify loans past the advertised 2-year recovery period as funds in recovery, and there are currently 3 such debts. In practice, almost everything on Indemo is in some stage of recovery because the entire model is buying discounted defaulted debts and recovering it. So what this really tells you is that less than 1 million has overrun the 2-year promise. Repayments have also increased with the latest average close to 14% and individual returns between 12 and 22% per year. Income Marketplace reports 31.1 million in outstanding portfolio and about 905k in the buyback initiated category, which we classify as funds in recovery. They have also added a new loan originator, One Leasing, whose metrics are on our lender ratings page. TWINO sits at 9 million with 4.16% in recovery, down from 5.2%. There is a real progress here because TWINO has now repaid all the Russian loans to investors. What remains is about 1.6 million still defaulted in Vietnam, and what happens there is unknown. Via Invest data is outdated and it has not published any updates. LANDE reports close to 35 million with funds in recovery increasing to 8.77%, adding roughly 900,000 over the past month. Here we can see how the funds in recovery share have evolved over the past few years. As you can see, there is quite a spike recorded for August. Additionally, LANDE is introducing an inactive account fee which will apply from the 5th of October. Crowdpear reports 21.6 million with 2.3 million in recovery. After last month's increase in defaults, there have been no new defaulted loans. As a reminder, defaulted loans on Crowdpear accrue an additional 5% yearly interest on top of the regular interest paid out once the project is recovered. Capitalia moved the wrong way on both sides. The portfolio decreased by 6.8% while the funds in recovery rose to 11.7%, up from just under 10% in July. Insoil Finance sits at 51.2 million portfolio with 22% in recovery, a marginal improvement. Bondora Go and Grow reports the largest single portfolio we track at 786 million, up over 8% from the latest reported data, with 215.6 million in recovery. The share improved slightly and the platform keeps attracting new money, but more than a quarter of the biggest book in this table is in recovery. The lender's margins are essentially used to carry the portfolio on board while paying investors a 6% yield with instant liquidity. Which brings us to Mintos. The outstanding loan portfolio grew to 686 million and funds in recovery stand at close to 198 million or 28.8% of the portfolio. That fall is not what it looks like. Nera Capital and MFO FintechFinance are now officially declared as suspended lenders, so the exposure that was visible only inside affected investors' dashboards in July is now on the public page too. During our reporting last month, we ignored the flattering public figure and used the unofficial 202 million for our risk score because that is what the internal data was telling exposed investors. The data has now been updated on our end to reflect the current situation. However, investors should continue monitoring the internal statistics page of overdue loans for more accurate details, as Mintos is not publicly sharing it with the community. EstateGuru reports a roughly 196 million outstanding with 127 million in recovery, 65% of the entire portfolio. Recovery remains very slow even in their active markets, where the platform reports a defaulted portfolio of more than 30%. If you look at EstateGuru from a bird's view perspective, we can see that the platform reports about 100 million in investors' total earnings across the entire history of the platform. The capital currently sitting in default and recovery is larger than that, and many of those loans have been there for 3 to 4 years with no sign of resolving. It is not written off and some will come back, but if you put investors' lifetime earnings against that capital that is stuck, the defaulted capital wins, and on that basis, the business does not seem sustainable. One practical note, in August the platform moved its accounts to LHV Bank, so if you use their IBANs, you should update your records. For two platforms, we report their entire portfolio in recovery. Ventus Energy remains at 95.5 million with no repayments last month. The platform has still not shared any operational update on its blog. Instead, it relies on internal communication with affected investors. So from the outside, it appears like it's still operating as usual. Revest24 is the same with 26.3 million, and their blog is no longer accessible. In my view, it is just a matter of time until the website goes down too. My guess is that the entire organization will wind down and investors will never see even a single euro from their investments. This leaves the platforms that do not report performance data, and this group keeps getting bigger. Nectaro reports 27.6 million in outstanding portfolio. Its pending payments, however, are not reported publicly, which would count towards funds in recovery. So there is no reliable way to see which funds are delayed, but not yet credited to investors. Modena grew by almost 10%, while we have no insights into the performance of their loan book. The audited 2025 financials are now on our lender ratings page, where you can review the key financial metrics. Digilo is a new regulated platform which joined this list with no statistics published at all, and the rest, Bondster, IUVO Group, Swapper and Monefit, do not disclose even the assets under management amounts. So to summarize August, across the 31 platforms in this overview, there is about 2.67 billion outstanding, around 109 million more than last month, and roughly 690 million of it is in recovery. 8 platforms self-report a clean book as of the time of recording. Keep in mind that this is publicly reported data. Whether it is accurate or truthful is not for us to verify. Remember that some of the platforms with clean books do not publish the latest financial data, which could mean elevated hidden risks for investors. So despite some platforms reporting some funds in recovery, it does not mean that they are by any means much worse than platforms with clean reported loan books. For more insights into where the risk sits, review our platform's safety scores on P2P Empire, which take portfolio performance, track record, and the regulatory environment into account. Our lender ratings page covers the financial health of the lenders you are funding, and you can download our due diligence checklist if you are just getting started. If you found this video helpful, hit the like button and subscribe to not miss out on future updates. Thanks for watching, and I will catch you in the next one.